Hi everyone. Today I want to share on how to prepare a sales ledger control account or a trade receivables control account. To begin with, is it an asset account or a liability account? Yes, it's an asset account and the principle of an asset apply. Anything that increases the asset is recorded on the debit side, and anything that reduces the balance is recorded on the credit side. Let's now look at the balances, the opening balances, right? This balance BD debit is recorded on the debit side, and it represents what trade receivables have to pay to the business. And we also have this balance BD credit, and it is supposed to be recorded on the credit side, and it represents what the business has to pay to the customers. Then let's look at the transactions that are supposed to be recorded in the control account. We have credit sales, and where are we supposed to record it? Yes, on the debit. Why? Because credit sales increases the amount owing from the customers. There is also refunds. Refunds are amounts that are paid by the business to customers. If they return goods and they are not refunded, they need a refund. So we record on the debit side because the amount is recorded on the credit side of the cash book as a form of a payment, and then a debit entry in the sales ledger control account. We also have dishonored checks. Where are we supposed to record them? On the debit or the credit side? Yes, it's debit. Why are we saying debit? Because dishonored checks are checks that have been barred from payment by the bank because of a number of reasons. So the payment would have been made on the credit side before being rejected by the bank. So to cancel this payment on the credit side, we record on the debit side. We also have interest on overdue accounts. We also record them on the debit side, right? So they are going to increase the balance because if a customer fails to pay in time, the business can add an extra charge, right? So that extra charge increases the balance, the debit balance. We also have returns inwards, debit or credit. Yes, it's credit. Why? Because if a customer returns goods, then the balance reduces. We also have discounts allowed, debit or credit, right? It's also credit. Discounts allowed. Why? Because it is going to reduce the amount that the customer has to pay because it is a deduction from the invoice price. We also have irrecoverable dates. If customers fail to pay the amount, it is cancelled. So it's also a reduction. Irrecoverable dates. We also have a set-off, and a set-off is a settlement between two individuals, right? Those individuals are both debtors and creditors, trade receivables or trade payables. So it is going to reduce the balance. So we record on the credit side again. We also have cash that customers pay to the business after buying the goods on credit. It is also going to reduce this balance that they are supposed to pay. So we record on the what? On the credit side. cash or bank. The amount might be paid using cash or by a check. Then at the end, we need to find the closing balances. So this balance on the credit side will end up on the debit side. So it will be balance CD on the debit side. Then this balance on the debit side ends up on the credit side. So we have our closing balance here. So this is how we prepare a control account, the sales ledger control account. Thank you very much.